Did you know you could invest in gold? The allure of gold has captivated investors and treasure seekers alike for centuries, often serving as a symbol of wealth, power, and stability. Its glittering charm has not only offered a solid foundation for diversified portfolios, but also provided a hedge against economic uncertainties. Even the notorious pirates of the high seas were drawn to gold, plundering ships in search of this precious metal to amass fortunes. Investing in gold can be an attractive option for those looking to diversify their portfolios, hedge against inflation, and protect their wealth during times of uncertainty. Kind of like right now. The enduring appeal of gold, whether it be for investing or legendary treasure, speaks to the undeniable power it holds in the world of finance and beyond. So, is investing in gold the ideal choice for your financial portfolio? To make an informed decision, we must first dive into the captivating history of gold as a time-honored investment. Gold has been valued as a store of wealth for thousands of years, and its value has generally held up well over time. People have been drawn to gold as a way to preserve their wealth and hedge against inflation and currency fluctuations. One of gold's primary advantages is its ability to diversify an investment portfolio. By allocating a portion of your assets to gold, you can spread risk across various asset classes, potentially reducing the overall volatility of your portfolio and providing a more stable return. Historically, gold has been considered a reliable hedge against inflation. As the purchasing power of paper currency declines during periods of rising inflation, gold often remains or even increases in value. This characteristic makes gold an appealing choice for investors looking to protect their wealth from eroding due to inflation. Also, in times of economic or geopolitical turmoil, gold is often seen as a safe haven investment. Investors may turn to gold as a store of value when confidence in other assets, such as stocks or bonds, diminishes. The perceived stability of gold during uncertain times can help protect an investor's wealth and provide a sense of financial security. For those with exposure to foreign currencies, gold can also serve as a currency hedge. Since gold is typically priced in US dollars, its value can act as a stabilizing force against fluctuations in other currencies. This can be particularly valuable for investors looking to minimize the impact of currency movements on their investments. Lastly, gold is often viewed as a long-term store of value with a history spanning thousands of years as a cherished and valued asset. By investing in gold, individuals can preserve their wealth for future generations, ensuring that their financial legacy remains intact. Before diving into gold investments, you need to examine the different methods of investing in gold. The first way to invest in gold is actually buying physical gold. This includes gold coins and bars. Keep in mind that storage and insurance costs are also associated with owning physical gold. You then also have the option of getting gold ETFs and mutual funds. These investment vehicles track the price of gold and can be traded on stock exchanges. There's also gold mining stocks. By investing in gold mining companies, you can potentially benefit from the company's growth and gold production. Finally, there's gold and future options. These are more complex investment instruments that allow investors to speculate on the future price of gold. However, it's essential to carefully consider the various investment methods and their potential impact on your overall strategy. If you enjoyed this video, make sure to subscribe to my channel for more. I wish you nothing but the best on your journey towards financial success.